Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://www.morningdownload.com. Subscribe. Let's dive right in. In today's episode, we'll cover the stock market's continued strength and Nvidia reaching new highs, investors wanting Musk replaced, criticism of the 4% rule, Argentina considering switching to the dollar, McDonald's increasing stake in China, Asia markets rising, Tesla investors wanting Musk suspended for endorsing anti-Semitic views, Polkadot surpassing Ripple in crypto exposure, Bullish acquiring CoinDesk, the US seeking $4 billion from Binance with a resolution expected soon, and the importance of knowing what you own and why, according to Peter Lynch.
Stocks are on fire right now, and it seems like nothing can slow them down. It's like they're on a never-ending dream run. Here's a fun fact for you. Did you know that the S&P 500 was actually first introduced way back on March 4th, 1957? Now, let's get into what's happening in today's episode. First up, we've got some big news from Nvidia. They just hit a new high before their earnings report. Next, some investors out there want Elon Musk gone. Why? And finally, we're going to talk about why the 4% rule, well, kind of sucks. Nvidia had quite the impressive day, with their shares closing at an all-time high of $504. That's definitely cause for celebration. And guess what? We'll get to see their fiscal third quarter results tomorrow after the bell. Analysts have their eyes on this one, expecting a whopping revenue growth of over 170%. Now, Nvidia usually doesn't give us much guidance for the upcoming year, but everyone is curious about how demand is looking for 2024. Investors will be examining any hints or indications during the earnings report. Speaking of trading, Nvidia seems to be a crowd favorite in the options market. Implied volatility for the calls is on the rise, which suggests a stronger demand for those calls compared to the puts. And get this, based on the Nvidia long straddle strategy, the stock is expected to rise or fall by about 8% after the earnings announcement. Quite the potential for some interesting market moves. Moving on, let's talk about Microsoft. They hit a new high at $377.44 after hiring former OpenAI CEO Sam Altman. However, things at OpenAI aren't looking too great. Apparently, over 500 employees are threatening to quit because of Altman's firing. It's definitely a situation to keep an eye on. Now let's take a quick look at some global news. Can Argentina really transition from the peso to the dollar? That's a big question on everyone's mind. Plus, McDonald's has increased its minority stake in its China business through a deal with Carlyle. And over in Asia, markets are mostly up, following the tech-fueled gains on Wall Street. Looks like things are on the up and up. So, there's some drama going on at Tesla. Some investors are calling for Elon Musk to be suspended by the board for endorsing anti-Semitic views on social media. Jerry Brakeman, president of First American Trust, is leading the charge, saying that Musk went too far by agreeing with an anti-Semitic post that claims Jewish communities promote hatred against whites. Brockman thinks Musk should be put on leave for 30 to 60 days and attend empathy training or therapy to understand the impact of his actions. But here's the reality check. This suspension probably isn't going to happen. While Brackman is making a fuss, he only owns 16,000 shares in Tesla, which is a small stake compared to Musk's whopping 411 million shares. Musk is pretty much one of the big dogs at Tesla, being a co-founder and all, so he has a strong hold over the company. The Tesla board, led by Denham, with members like James Murdoch, Ira Ehrenpreis, Musk's brother Kimball, and Musk himself, hasn't put suspending Musk on their agenda. And it seems like Musk has some pretty influential people in his corner. Hedge fund billionaire Bill Ackman has come out in support of Musk, stating that he believes Musk is not an anti-Semite. As for Musk himself, he's brushing off the controversy, calling it bogus. Clearly this is a contentious issue, but we'll have to wait and see how it all plays out. Let's talk about what's going on in the crypto world. Ripple, which used to be a big player, has been overshadowed by Polkadot. In fact, Polkadot now accounts for a slightly larger portion of the total crypto exposure, at 1%, while Ripple only contributes 9% to the $10. 27 billion crypto exposure. This is a real challenge for investors, as Ripple seems to be losing its hold on the market. In other news, crypto exchange Bullish has recently acquired the news website CoinDesk. CoinDesk has been around since 2013 and was bought by DCG 3 years later. Now, under the ownership of Bullish, CoinDesk will continue to be led by Kevin Worth and will operate as an independent subsidiary. It will be interesting to see how this acquisition affects both Bullish and CoinDesk moving forward. Finally, let's talk about Binance. The U.S. government is reportedly seeking more than $4 billion from Binance in order to settle a case. We might see a resolution to this matter by the end of the month. It's a significant development, and it will certainly be interesting to see how it plays out and what impact it may have on the crypto industry as a whole. The 4% rule is a popular guideline for retirees, suggesting they can safely withdraw 4% of their retirement portfolio's initial value each year, adjusted for inflation. It's a reasonable starting point, but keep in mind that it may not be suitable for everyone. One factor to consider is the number of years you have to enjoy retirement. The rule assumes a 30-year horizon, but people are living longer and working longer. If you have more or less than 30 years ahead of you in retirement, you might want to adjust the withdrawal rate accordingly. For example, if you retire early, you may need a lower rate, while if you have a longer life expectancy, you could potentially go for a higher rate. Another point to remember is that the data behind the 4% rule might not accurately predict future market returns. Experts suggest that returns in the coming years may be lower than historical averages, so relying solely on this rule could be misleading. Moreover, the 4% rule is quite inflexible. It assumes you will increase your spending every year by the rate of inflation and never have years where you spend more or less. In reality, most people's expenses fluctuate during retirement, making this rule difficult to follow. Additionally, the rule is based on a specific portfolio composition of 50% stocks and 50% bonds, which may not align with your investment strategy. Lastly, the 4% rule doesn't account for costs like taxes and fees. These expenses can significantly impact the amount available for spending. In conclusion, it's essential to assess your unique situation and consider a withdrawal rate that suits your needs. Don't hesitate to adjust the rate as your circumstances change. Hey there, let's dive into today's personal finance quote. It's a great one from Peter Lynch. Know what you own and know why you own it. Such a concise and powerful message, don't you think? So what does this quote mean? Essentially, it's all about being knowledgeable and intentional when it comes to your investments. When you invest in something, whether it's stocks, mutual funds, or real estate, it's crucial to have a clear understanding of what you actually own. This means knowing the details and inner workings of the asset or investment vehicle.
On this episode, we covered a range of topics, including the stock market continuing its strength, Nvidia's new high, investors' call for Musk's replacement, Argentina's potential switch to the dollar, Tesla investors' concerns, the crypto market with Polkadot surpassing Ripple, and the importance of understanding your investments according to Peter Lynch. Thanks for tuning into the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.